What do you think was the most important thing Buffett said that individual investors should know about investing?
Well, so it's really it's I appreciate you asking that because it's the easiest question for me to answer, and that's because Warren Buffett said the most important investing lesson you could learn right now. He sort of very much telegraphed what exactly that was. He has this sort of long-standing famous bet with Protege Partners, which he made back in 2006. And it's essentially, or is initiated by the New York Fund, which was over a decade predicting whether the cumulative returns of 5 hedge funds picked or the S&P 500 Vanguard index would win. And essentially Buffett's on the one side saying, listen, passive, low-cost indexing wins against this sort of fee-heavy, hyperactive, hyper-reactive management style that hedge funds do. And so far, it's not quite finished, but so far he's winning 3-1. We're talking 60-some% gains versus 20-some% gains. I want to say it was a 21.9% return so far as of the end of 2015 versus 65.7% in the S&P 500, showing that passive investing works. That really it's sort of not. It's not reacting to the day-to-day. It's not freaking out about what one quarter earnings means or another quarter earnings means, but really just sitting, watching, and letting it ride.
Yeah, and that's cool that you mentioned Vanguard. Vanguard is a very, very low-cost way to invest.
Mm-hmm.
Their fees are so much lower than competitors. I think a lot of other funds, their fees run around 1%, which when you're investing is huge, and Vanguard is like 0.05, I believe, for their S&P.
Yeah, it's a tremendously low-cost fund. And the point that Buffett really made here was that for many investors, even for most investors, passive low-cost indexing is simply the way to go because if you don't have the time to do sort of Charlie Munger and Warren Buffett style due diligence on a company, the answer really is something simple and just not reacting and letting the growth compound over time.